Hey guys, I hope everyone's doing really well. Today I want to talk about the number of pairs you trade and, in particular, how to refine that list and tailor it to suit your personality a little better. What we're looking at now is the probability calculator from lesson 6. And if you're not up to that part of the course yet, don't worry. Keep listening to the video, and as you get to lesson 6, you will already know how to use this program anyway. Basically, what it allows you to do is type in a strike rate, enter your average profit on winners and the average loss on losers. It then gathers this information, runs it over 5,000 random samples, and generates a neat looking account equity curve like this one. The aim of the game then is not to show you how much profit or loss you'll make at any given time, but rather to show beginners that your account can and will definitely go through periods of drawdown and consolidation like in this period of time here. What I thought I'd do then today is, instead of using the single equity curve model like we have here, I would multiply that by 3 and show you simultaneously 3 on the same graph. What this indicates is simply a difference between trading a few number of pairs and a large number of pairs. If you look over to the left, you can see that the blue line is representative of trading 8 pairs, the red line 14 pairs, and the green line is the full 20 pairs that we recommend you begin with. Now, as you can see, all the moves are very correlated. As one line loses equity, they all lose equity. As one line gains equity, they all gain equity. The difference is that they do it at different rates. This is because the more pairs that you trade, the more profits you will make during profitable times. On the flip side, during drawdown periods or times of market indecision, you will tend to lose more when you trade more pairs. This then comes down to sheerly a matter of personal preference. If you're more conservative and would prefer a smoother account fluctuation, you're better off with fewer pairs. If you're more aggressive and want to go for maximum profits and are willing to have massive account fluctuations in the meantime, then stick to a higher number of pairs. So why is it that we recommend that all our beginners start with the full 20? This isn't because we think that everyone's a crazy aggressive trader by default. It's purely a matter of practice. When a beginner first signs up for a demo account, the priority isn't necessarily to make massive profits and refine your trading routine straight up. In fact, the priority is generally to learn the strategy, understand the platform, learn to set orders, trail stops, and manage positions. By watching 20 pairs each day instead of just 10, it essentially doubles your exposure early on in the piece so that you can have the most practice you can possibly have when learning. Over time, however, you will start to refine your routine. Now, if you're already using the ProTrader's journaling software, you may have noticed by now that it caps out at 1,000 trades. The reason we have built this into the program is that so you can slowly start to refine your strategies and your routine over time to better suit your personality and your needs. See, if you're trading full time and living off the profits of your account, you may choose to have smoother account fluctuations so that when you pull money out each month to live off, it's not cutting into already a massive drawdown. This is why personally I trade 8 pairs. I know that Amy trades about double that now, and this is merely because she's more of an aggressive trader. Over the long period of time, it has turned out that she has generated higher percentage returns, but in the short term, my account fluctuates a lot less, and that suits my personality better. So every 1,000 trades, when you start journaling, make an effort to slowly tweak your strategy. If you feel that you are more conservative and would prefer lower profits and smoother account fluctuations, definitely remove 1 or 2 pairs off each 1,000 trades. Historically speaking, the 1,000 trades it come around about every 4 to 6 months with the 3 swing trading strategies that you are learning. So every 4 to 6 months, you can slowly tweak your strategies, and eventually you may find yourself quite a conservative trader like myself. The reason that we structure the refining process like this with the 1,000 trade rule is because we have a lot of emotional traders who want to randomly adjust their trading routine or their lists at the drop of a hat based on how they're feeling at the time. Just recently, we've been through some massive yen drawdowns for the last 2 or 3 months. A lot of traders lost money on the yen, and we had a lot of emails from students saying, I'm going to stop trading the yen now because it's just not working. And I said to them, I actually brought this up in the previous screencast. I said that's the worst thing you can do, because if you're taking drawdown with a certain number of pairs, you don't have those particular pairs in your trading arsenal again for when the pairs run again. And as we've seen in the last week, the yen has absolutely gone through the roof. And a lot of traders missed out because they emotionally changed their trading routine. By sticking to the 1,000 trade rule, like I've just explained, this is the best way to efficiently and consistently change your trading routine over time. If you guys want to check out this modification to the probability calculator, I can send it to you. Just send us an email and I'll fire it on to you. And you can play around with the numbers yourself and check it out. But hopefully this has taught you a little bit about refining your list over time. And if you need any help, as always, email us and I'll get back to you as soon as I can. All right, guys, I'm off for now, but we'll be in touch soon. Bye-bye.